Hey, Evan. So, hi, Amy. We have Ami, we have Anne, we have Aris, we have Brenda, we have Camino, we have Claire, we have Jan, we have Janos, we have Johnny, we have Kenny, we have Kim, we have Corey, Laura, Lizzie, Mel, Nova, Nola, Olu, Patrick, Reshma. Awesome. A lot of people, nice people, Yogi, sharing. Awesome. So, today's session is going to be about, it's going to be quite powerful because if you haven't watched the training yet. Yeah, today's session is going to be quite powerful, really trying to summarize back on how true financial freedom so many of our students achieve, how is that actually works. So we're going to refresh it back. Repetition is the mother of skill. So if you heard it already, that's absolutely fine. So hi guys. So that's the first part. We're gonna recap back how true financial freedom is actually achieved. So you got a clue about it. We don't think we have shared it like that before. Um, and then we're going to talk about what happened to the market right now, what's going on, and especially with some of the trades we recommended some time ago, like coffee and stuffs as well. Okay, so cool. That's what we're going to do. Now let's have a look right now. I'm going to share my screen very quickly. Awesome. Hope you guys are having a great day. Cool. So let's start a little bit. How do I share my screen? Just a little bit, just right there. Awesome. Cool. So yeah, before we start on anything, we always want to start by looking at we do it many times, but we just want to do it again just because the secret to mastery is repetition. So secret to success is repetition. As you say, no matter what happened to the economy, I want to say congratulations for a lot of you because you can see no matter what happened to the economy, whether it's 2000, the internet bubble, we had a financial crisis in 2007, 2008, whether we've got this corona crisis going on or we've got this crazy, this is 2020, 25, this is the tariff crisis where Trump comes out and say, you know what, guys, we're gonna raise tariffs, raise taxes for other countries. This is the inflation crisis where people are printing money. And right now, that's what we've got at this moment in time. Yeah, that's what we got at this moment in time. Historically, you can see almost every single year. This one, it crashes around 32%. This is 2000. And in 2020, here, it crashes around, this is 38. This is around 38%. Let's see how much is that. This is 33, crash to 22, 33, 22. 33, 22. So it's 11 divided by, yeah, it's around 33%. Okay, it crashes around 32, 33%. Lots of our students aim right at the bottom, just right there. This is in 2000 inflation time. And then it's a really nice time again. This is a corona time. And then this is the inflation time. Yeah, this is when the economic all got shut down and it come back really nicely just right here. This is kind of like the inflation time where people print too much money. Market crash around, let's see, 48 to 34. 48 to 34. Let's do it one more time. 48, 34. So what you do, you use 48 minus 34 is around 14. 14 divided by 48. 14 divided by 48. Yeah, it's around 30% drops as well. Yeah, this crash is around 30% drop. And then we have another drop here. This is almost 30% drops as well. This is like, so this is, let's see. This is a small 30% drop, and then there's a small 10% drop here, another small 8% drop here. This is a 10% drop, and then this is a 25% drop. That's a tariff crisis, okay? So that's what we've got. So right now we are kind of here at this moment in time. Now, before I talk about that, I just want to talk about how to actually make money properly in the market, okay? How to actually make proper money in the market. This is probably one of the most important lessons you will ever attend. Yeah. So how to actually make big money in the market like that? You saw a lot of our students sharing their journey. You saw how, a lot of our students sharing their success to achieve financial freedom like that. How is it actually happen? I'm going to give you a step-by-step breakdown. Usually we will do it for apprentices, but I'm going to show you right now. So you can see the first step, what we got this can be a repetition for a lot of people, for a lot of you, but we never really explained in this way before. You can see that during extreme fear time, we already know you want the fear and greed index to reach extreme fear. So, when it is below 10%, below 10%, we recommend you to put around 10% of your money in. You start dollar cost averaging every day. When it drop 10%, you put 10% of your money in. You put 10% of your money in. Yeah. So if it drops, So if it is dropped below 10%, you put 20% of your money in. But when it drops below 20%, then you put 10% of your money in. What does that mean? I will show you later on, step by step, how it meant. Basically, every time we reach extreme fear, you don't care. You just put a little bit of your money in, a little bit of your money in. Every day you put a little bit of money in. Really powerful stuff. Hi, Vishal. And then we have market valuation here. On a morning star, same thing. When we reach around -6 to -10, you also put 10% of your money in. So you don't have to aim like that. You put a little bit in, a little bit in, a little bit in like that. And then you add 10% of your positions again when the volumes spike. We talk about this a lot of times. Yeah. And then you add another 50% of your position when open inside the crossover. What is this percentage? That means if you have £10, $10, wherever you've got, 50% of your money. Yeah, something like that. That's what I meant. If you have 1 million, lots of our students already reach retire, like to become financial free. They understand what I'm talking about, what I am talking about, because they come across this many times. And then when you look at AAII sentiment, when it is very negative, I will show you exactly what I meant later on. You add another 30% of your money in. And then when the put and call ratio reaches the previous resistance high, we'll talk about put and call ratio, and then you add 5% to 10% every single day. Maximum 50% if it is not the biggest resistance, okay? And when VIX reaches previous resistance high, you add another 5% on every day. And then when do you use leverage? When do you use leverage? On eToro platform, you use leverage when this happen. What stocks do we buy? People, oh, Raven, you say buy stocks when extreme fear happen, market valuation that happen, all of these happen. But what stocks should I buy? Now, we normally share this on apprentice, but I'm going to tell you right now. So when the market drops below 10% from the all-time high, you want to buy some high growth stocks with a relatively low PE ratio. Yeah. So these can be things, the big one. Okay. The Meta, the Google, the Nvidia, the big one. You also buy VUAA, the index, IGUS, EQGP. This is QQQ. No leverage. People often ask me, Raven, when do you sell? On this situation, you actually don't have to sell. As such as a big cap, if you buy your index, you never sell. Yeah, look at it carefully. Anyone who sold Tesla 10 years ago, they all lose, they all miss out big time. Anyone who lose Apple 10 years ago, they all lose out big time. So this is when you really let your money to work for you big time. You put it in, you let your money work for you, you go sleep, you don't work anymore, but your money is keep on working for you. So where the AI is coming in, your business doesn't work anymore, everything replaces, the world goes down. The good news is you are still making money. Yeah, so that is really important. Oh, can I sell you? You can sell if you want to. Yeah, but on top of that, you also get something we call dividend. A lot of our pensioners, they just survive on this. They get a lot of dividend. It's like your rental income. Yeah, really, really nice. But a lot of the platform, you can use your card. If you use Trading 212, you can literally, they have a card where you can use your card to buy stuff. So you never really have to do anything. You never really have to cash out your money. Second part, because you can spend your money. If you want to buy mortgage, you go to the bank, you say, hey, I have these stocks. I want to mortgage against this. You'll be like, oh, they look at your stocks and then they mortgage for you. Yeah. So stocks is a really, really powerful thing where they will all accept. And when the market drops more than 10%, then this is where you will, I spent more than 1.2 million pounds of my money learning from top traders all around the world to learn from this. Yeah. You choose some really, really high growth. Before that, 20 years ago, I was doing like free signals and stuff like that. Never really get consistency. Every day is a new day. I want to get into trading and investing because I want financial freedom. I want to spend time with people I care about. And, I want making money without sweating, without working, 9 to 5 like that. So I have to find some ways, not the free Forex trading. Every day is a new day. This one, you do it one time, continuously your money coming in. And I wish I knew this earlier when I first started. A lot of people learn this the hard way. A lot of people for the rest of their life, they never know about this stuff. But anyway, carry on. So if the market drops more than 10% more than all-time high, you will choose some really high growth stocks, okay? The multi-bagger stocks, the week 4 guidance that you were looking at. You want 30% year over year, okay? Not quarter to quarter. If quarter to quarter, it will be just 10%. 10% times 4 is 40%. So you want year to year, okay? You sell this when we are reach an extreme greed, when the guidance drop, or when this market is overvalued. I'm going to show you some practical examples later on. And then when the market drops more than 80% from all-time high, this is what I show you just now, and hits all the 6 criteria, this is where you can use leverage alongside with the volume spike. Yeah, really powerful stuff. So let's go straight into it right now so you completely clear what we are talking about here. Yeah, because some people do not get it, but that's fine. We are here to assist you. Now, there are many things I can choose from. If I'm going to choose from, I recommend you to, once I did it now, I recommend you to go back to back tests for as many years as possible. You will see that these strategies is foolproof. Literally, I've never seen such any powerful strategy like that. Every single time during extreme fear, you follow our steps, exactly what we talk about. You will see that money generating like that. Yeah. So I'm gonna back test. You can back test any month, any situation that you wish. Let's have a look. Let's just choose. Let's see. I want to show you how to do it so you know exactly how to do it. A lot of our students already know it, but I just want to recap it back properly, practically how it works. So, for example, if let's say I talk about, okay, for example, yeah, you will be like, today is, repetition is the mother of skill. So let's say, for example, you'll be like, okay, today is, I don't know. Let's say you start with today is 25th of January, 2024. You'll be like, okay, today is 2024 January. So you'll be like, oh, should I buy something? Should I sell something? You don't really know. You look through our strategies that I just showed you that. Okay, so let's go through step by step right now. Give you a practical example. You have to pretend you are there. Okay, so that when the time comes, you know exactly what to do, because this is a practice now. If you don't do this practice, when the real life later, you're gonna be shaking, you're gonna be screaming. But anyway, so investment success. Go to this website. Everything is there. So we're gonna do that. So let's pretend the date that we are looking at was January 22nd. I'm just going to write that down. 22nd of January. Okay. 22nd of January 2024. It can be any date, literally. Yeah. Pretend you'll be like, oh, should I buy? Should I sell? You'll be like, you don't know. Just you go through our step-by-step strategy real quick. So 24th January, you'll be like, okay, January, let's have a look. 24th January. Yeah, 23rd. So you can see January time, we are on 70. Okay. Fear and greed index, the blue one, is on 70. Okay. 70. What do we do? Down in the chat box, when 70 is kind of like a greed stage. Do we buy on the greed stage? Down in the chat box for me real quick. Do we buy on the greed stage? Yes or no? Just type yes or no. Do we buy on the greed stage? Down in the chat box. Yeah. So it's a greed stage. So we don't really buy things at the greed stage. Okay. But anyway, let's continue. We do on a greed stage. And then you'll be like, okay, the first step, is it on fear? If it is not on fear, you don't put 10% of your position in. Leo, you're right. Kim, you're right. Louis, you're right. Akim, you're right. Yeah. So, and you're right. Well done. So then you don't put 10% of your money because it's not on your fear. And then you go to the next one. Market valuation. Is it on negative? So you do the same thing again. So let's open that up. Market valuation is number 8. Yeah, on the Morningstar, really important website. And then you do the same thing again. And then you'll be like, you'll be like, where is January? Yeah, January is here. 24 is a bit overvalued, so you don't do nothing as well. Yeah, it's a bit overvalued there. And then you carry on. And then what do you do? Let's have a look. So the second one, you carry on. Market valuation is not It's not -6, -10. -6, -10 will be exactly what we saw here. This is negative undervalue. This is undervalue. This is undervalue. And the 1st of January here, when we see it was positive, it was overvalued by two. So it's not the time for you to put 10% of your money in. Is it a volume spike? The volume spike has to be on the condition of 1 and 2. Okay, it has to be a condition. So if there's nothing. Is there an open insider cross? There's no crossing. Is there an AIM report? Is it very negative? No. Okay, you look at it, you will see it. Put and call ratio, is it reaches the resistance line? Let's have a look. Type put and call ratio. Let's have a look. What day is that? 22nd of January. So let's have a look. 22nd of January. Yeah, the 2nd of January is just, okay, let's just do 5 years so you can see properly. So the first step, we want to draw the resistance first. For those who do not know, put means selling. So you basically buy when it's at the top, all right, when it's at the resistance. So let's try to draw resistance first. I hope you already know how to draw a little bit of your resistance here. So January time, we are just around kind of like here. Okay, let's see where's January. Yeah, 22nd of January, we're around like at the bottom there. Okay, so you draw previous resistance, so it's not there. So you don't click the buy buttons as well. The VIX reaches previous resistance high. The VIX wasn't reaches. So you type VIX here. Type VIX. It's called volatility index. And then you look at the date. Where's the date? 22nd of January. 22nd of January. Let's have a look. Yeah, the 2nd of January would just be so before. Yep, we're just at the top, at the bottom here. So before that, you always want to draw the resistance. So if I'm gonna see this, the resistance could be this, or the resistance could be this as well. Okay, if I'm here, let's draw properly. Like if I'm here, the arrow here, resistance could be the top part and it's at the bottom. So we don't buy this as well. Volatility index has to be at the top. Top means people are scared, people are fearful. And then, okay, that means nothing going on, so you don't buy. All right, so you don't buy. So that's what happened to January. You just don't do nothing there at that moment in time. Okay, so let's continue. Where are we? Just now was just here. Yeah, so that's January. So you don't do nothing there. So it's just eventually it came down. So when it came down here, this is kind of this is kind of you do the analysis again. You'll be like, oh, I don't know what's gonna happen. So you do the analysis again. So how would you do the analysis? Let's say you were on, I don't know, 11th of April last year. Okay, 11th of April last year. You do exactly what we're going through. So fear and greed. You go to 11th of April last year. This is practical, yeah, really important. So 11th of April. So you will be like, okay, we want extreme fear. So let's see. Let's see, 2020. Let's look. This is January. This is April. Oh yeah. So you'll be like, okay. So you'll be like, okay, April was just in 18th of April. The lowest, the blue line is a fear and greed. It's only 30. So it's only 30. 30 is kind of like a fear. It's not extreme fear yet. So you'll be like, okay, that's okay. So you don't put 10% in because you want to add when it is below 20. Yeah, you add 10% when it's below 20. At that moment, it was what? Let's have a look. It was just at 27. So it's not there yet. 19th of April. So you don't add your position yet. And so that's what happened. Market valuation. Is it 6 to -10? Let's have a look. Market valuation. Where is that? Okay, market valuation on that was just around 3. So you don't add your position just yet as well. You add position when the volume spike, you probably can't see the volume spike. Add another 30% when AIM sentiment is very negative. I will show you these kind of later on, but you should kind of know. Basically, you go on the website and you're trying to find out if it's very negative. But at that moment, it's actually not very negative. And you do the next one. The put and call ratio reaches previous resistance high. So that's what you do. You do the put and call ratio reaches previous resistance high. So where is that? So let's say your date was in, let's see, your date was in let's see. Yep. So your day was in April time. Okay, we talk about April. So you draw the line first, so that this is the date kind of where we want. I think it's around there. Yep. So you draw a line. Where's the resistance? Your resistance would just based on before. This could be your first resistance. Oops. And then this could be your second resistance line. All right. So it's almost touching the resistance line. Let's see where it is just touch. Yep. Yeah, the April time is just almost touching the resistance. You can see the line resistance here. Almost touching this resistance line. So 8th of April, you'll be like, okay, it's almost touching the resistance line. So what do we do? Put and call ratio almost touches the previous resistance line. The resistance line. So what you do, you put 5 to 10% every day. So 5 to 10% kind of every day. So you can start kind of like, let's see. You start on 8th of April, 9th of April, 11th of April, 17th of April. So you start adding a little bit of position there. Okay. So that's what happens. So you will be like, you add a little bit. This is where you start putting a little bit of position, 5%, 10% position every day. And then the maximum is 50% if it is not the biggest resistance. The biggest resistance is at the top here because it's not there. So you will add a little bit in. Now let's talk about the VIX. Now let's go to the VIX real quick just here. Let's see. So if you go to the VIX, you will see that our VIX was just in, let's see. Yeah, we're just in just right there. Let's see. Yeah, April time. So let's draw the line first before you pretend you can't see anything. You will be like, where's the resistance line? Obviously, if you are here, you will be like, this could be your first resistance line because this is very low. It's only 16. We kind of want to be higher, but let's pretend you do not know. You just draw whatever you can. And there's another, because we are here, isn't it? We're in March time, you're getting ready to buy. And then on the top here as well. Yeah. Don't worry if you don't get it, but the more repetition, you're going to get it later. So just accept it for now. So let's say you are here, you'll be like, you're waiting, and finally you saw this across a little bit of resistance here. This is on 12th of April, okay? There's a real resistance, 4th of April started to cross, but the real resistance really crossing just right there, yeah? The real resistance have crossing just right there. So you will really start to add a proper position in when it's just around here, okay? 15th of April, 16th of April, 18th of April, 19th of April, you start to add a little bit of your positions in just then, okay? So that's where you really do something there, okay? So just between 15 to 21. Why? Why is that the level? Volatility index measures how panicked people are, how scared people are, how negative people are. So when people are negative, you want to use the opportunity to go in. So it will spike up like that. So there's a resistance here. Obviously, the top one will be really nice. You look at October here, top one will be really nice. But this, I should say, if you reach a resistance, you can get in a little bit as well. So you're getting a little bit of 10% of your money in, 20% of your money in. That's kind of what happened. And the last part, you calculate what stocks to buy. Okay, now you know that you can put 10%, you can put 20% of your position. So let's say you have 1K, you put 10%. Let's say if you have 100 pounds, you put 10%, whatever that is. Okay, so in here you would have put around 20 to 30% of your money in. So what does that mean? So you'll be like, what stock should I buy? So this is what I told you. If it's dropped less than 10% from all-time high, so let's have a look. This is just on the index. Okay. So let's see. This is March. Okay. So it dropped from what? 52 to 49. 52 to 49. It's 3 divided by 52. What's that? It drops around 6%. Okay. 6% because it's not more than 10%. So you will be using this normal strategy. You buy some high growth stocks, the lowest PE relatively historical ratio. What website is good? Finance chart. Okay. I will show you kind of later on. Finance chart is good. So this will be like Meta, your Google, your Nvidia. You can also buy index, VUAA, IGUS, EQGP, and you buy them and you never sell like that. Yeah. So it went up really, really nicely like that. So you make a lot of money a little bit like that. Okay. And then what you do, and you repeat the same thing again. Okay. So the very, very latest one, a lot of people know, a lot of people who've been with me for many, many years, they already know, or no apprentices, they already know what happened. So let's talk about this for real quick. So so you will be like, okay, let's say you are here now. Let's do another example right now. Okay. Let's do another example. So with that, you already make money. So let's do another example. This is 27th of November. Okay, let's make it closer. Let's make it closer. Okay, this is like 21st of January. You'll be like, okay, it's a new year. Should I buy stock? Okay, yeah, that's what happened there. So let's do it. Let's do it another time. 21st of January. So you do the same thing again, step by step. 21st of January. Let's go. 21st of January this year will just be, let's go to 1 year. January. Okay, January will just overvalues as well. 21st is just overvalued by 6. Do you buy? No. Okay, you don't buy. Extreme fears, I don't think so. It's extreme fear at the moment. And all of this is not working. Okay, there's nothing going on. So you don't do anything there. All right. You don't do anything there. So you're very lucky because you didn't do anything there because you're on the training. So you didn't suffer the crash because everything crashed like that. Because this crash means that anyone who bought it a year ago, the whole thing here, temporarily, they kind of lose money a little bit. Okay. But I will tell you more about that kind of later on. So anyway, you continue, and then suddenly you'll be like, okay, I have a crash here. And you don't know whether this crash is gonna be like enough or not. Okay. So let's say you are on 27th of February. Okay, let's do another one. Let's say you are on what date? Let's say you are on, okay, you're on 23rd. Okay, this is good. Let's say you're on 23rd. You never know whether it's gonna go up. You never know where it's gonna come down. You're panicking whether should you buy or not. You use the exact strategy I just showed you that. Yeah, the apprenticeship strategy. So first you go to extreme, you look at whether it's fear at that moment. So let's have a look. You go on there. And that was what day was that? You can do it for 100 times. I recommend you to do at least 5 times, and so that you will see it. You know, when I show you right now, I want to show you late. I want you to go home and do it for me, okay? And text me. But anyway, let's do it. 28th of March. I'm going to show you one more time. 28th of March. So you go on here, fear and greed. You look at 28th of March. What happened? Okay, so you do it. 28th of March. Where is it? Let's see. 1 year. 28th of March. 28th of March. Let's see, is it 28th of March? Yeah, 28th of March. So let's do it. 28. Good. So 28th of March is just 20, it's just on 26. Okay. So let's pretend we make it easier. Let's make it 4th of March because it's extreme fear time. Okay. Because it went back up. So it's obviously, but let's do it when it's at 4. Okay. When it's 4th of March, it will just be here. 4th of March. Yeah. Just around there, 4th of March. Okay, just around there. Okay, 4th of March. Pretend extreme fears already happened. 4th of March, should you buy? Should you not buy? That's what happened. So this is what you do. Okay, let's look at it carefully. So 4th of March. Okay, am I looking at the same thing here? Okay, let's start again. Sorry. So all the way April. Okay, let's look here. Fear and greed is this one. So all the way 4th of March will just be okay. 4th of March would just be that. It reaches around 11. The lowest it's ever been is 11. So tell the chat box for me, please. What would you do on the 5th of March, 4th of March when it reaches 11 like that? Yeah. So you read it carefully. So if you read it carefully, it will be really, really nice, isn't it? Okay. You read it carefully, you'll be like, okay, when it is, you just go for here. This is your transcript. This is your rule. This is your blueprint. This is your financial freedom strategy blueprint. Yeah. So you'll be buying using 10%. Well done. So this is what you'll be doing. Laksana, Bobby, you're right. So you'll be like, okay, extreme fear. Is it negative 10? You'll be like, add 20% when it's below 10. But because it's 11, you will just add 10% in. Okay. You will add 10% in. But 10% on what? Okay, so you want to see if it's crashed more than 10%. So let's have a look. So from here, this is what? Let's have a look. This is 61. It dropped to like, there was 57. So 4 divided by 61. 4 divided by 61. How much is that? What's going on? It's around 7%. Okay, it's around 7%. So not there yet. So you'll be buying the normal stock, you're buying the index, you're buying the VU, IGUS, all of that. Okay. So you add a little bit that in, that's absolutely fine. Because you see, eventually you went back out. It's just that you will never use leverage, so you never lose money anyway. Okay. So and then continue. Let's have a look. What else have we got? Market jobs. Next one, market valuation. Okay, let's see what's the market valuation at that moment in time. So market valuation at that moment in time around 8 will just be fourth would just be 2.5. Okay, the date where we're looking at. Let's see. Extreme fear here. Around 4th March. Okay, 4th March, the market valuation will just be 4. Okay, 4 we don't really do anything. We do something when it's around 6 to 10. Okay, at least -6. Market valuation is how expensive, how much discount do you get? Okay, so you can see when it's around 6, that's absolutely fine. Okay, before that, 4th March was just there, so you only put 10% in, and that's about it because the rest is not really crossing. The rest, open insider is not crossing. All of this is not doing nothing. Put and call ratio is not doing nothing. All of this is not doing nothing. Okay, so then you wait for the more drop. The more it drop, the more tick is gonna happen. Okay, so the next time you go in is probably around 13th of March, around there. So 13th of March. So 13th of March will just be, yeah, will just be there, 8.1. Okay, 8.1, that's where you'll be like, what do you do when it's 8.1? So you start to add position in. So every day you add around 10%. And every 1 day, every 2 days, you add around 10%. So if you have £100, you put £1 in. Sorry, 10% is £10. If you have £1,000, you have £1,000,000, whatever that is, you put a little bit, a little bit, a little bit in like that. Okay. And when it's spiked, you put a little bit more. So basically, when do you actually do big, or when do you actually do it in a proper way? So you saw that when extreme fear drop below 10, that's where you add 20% of your money in. So let's have a look. So let's say extreme fears drop below 10. Let me see. Okay, so this is like 11, and then it went to 22, 29, and it went all the way down. Okay, it really went below 10 on 3rd or on the 4th. Let's have a look. On the 2nd is 3rd of April. So let's see carefully, is 12. So we don't put 20% in yet. But when it drops around, you can see when it drops around 4th of April, 5th, 4th of April, just right there, we come to 5. 5, guys. Fear and Greed Index reaches 5 on the 4th of April. What would you do? Yeah? What would you do at that moment in time? Okay, what would you do? So you would have, you have do even more, isn't it? You'll do even more. So let's have a look. So you would have do around 20% in kind of every single day, okay? Because it's less than 10%. So when you feel people are panicking, they don't know what to do, they think it's a scam, that's when you will buy, you will go all in, you will do things. So that's what happened. So the first one will be ticking your boxes, market valuation at that moment. Let's see what's the market valuation at that moment. Market valuation at that moment will just be 17. So it's also quite huge, really, really undervalued. Yeah. Life changing. And so this is also tick. You will also add a lot of positions in there. Volume spike. Let's see. There's a volume spike. So there's a volume spike here. Can you see? This is a volume. There's a volume spike. Volume spike happen when both of these are really good. Okay. You want to fear happen. You want market valuation to be -10, -6. Volume spike is a good time to get in. At 50% when open insider cross, it doesn't cross here, it crosses around there. So you can also buy it. Open insider actually cross as well. Let's have a look. Let me show you open insider. Where is it? Open insider will just be, I think it's here. Yeah, you go on the chart. You basically open all the pages there. Yeah, you can see it crosses around there. Usually doesn't cross. There's no crossing. Oops. There's no crossing. The crossings really happen just right there. 10th of April, almost there. 9th of April. Oops. One more time. And let's see. Yeah, where are we? Yep. Yep, just around. Where's the cross? Let's have a look. Let's do it. Let's see. Let's zoom it in. Alternate 3. Okay. Let's do it super fast. Anyway, so it's just around there. You can see the cross 28th of April just right there. So when you see the cross, you'll put 50% of your money in on 28th of April, just like that. That's still around this zone, okay? It's still around that zone. 28th of April. Yep, just around that zone, the red color line. Cool. So, and then you open inside the crosses, you will put 50% of your money in. That means if you got any spare, you got 50% pound spare, you put 50% of your money in. And then another one is it was very negative at that moment. So let me show you real quick what I meant by that. So you just go on here. AAII sentiment. They are all here. Can you see? AAIN sentiment. Make it very easy for you. Just because you are here. AAI sentiment here. So you just have to click download and then it should say download there. And you do it. So you look at the very negative one. So usually what numbers do we want? Let's have a look. The numbers that we want is usually more than 50, more than 60, okay? So that's where you can put a little bit of your money. I would say around 10% or 30% is okay. More than 50%. Okay, let's have a look. I would say around 10% actually. So let's have a look on that graphs. Where's the graphs? Let's see. 10% of your money in just right there. It just be at, let's see. Yeah, very, very negative line would just be 60. Yeah, just around that. Okay. The bearish was 61, one of the highest we ever saw. I would say between 50 to 60. Obviously, the higher, the better. Okay. So you put around 10% of your money in a little bit gradually like that. Yeah. And then put and call ratio reaches all-time high. So, reaches high. So do put and call again. So you do the put and call here. So we talk about the resistance line. You can see, obviously, we have a resistance line just right here. That's kind of, okay, let's see if we see properly. There's a resistance line that we've got. So this is where we are. So you can put a lot of positions in there when the resistance line is like that. But there's also resistance line on the lower one. People will be like, oh, Raymond, there's another lower one. Okay, you can also add a little bit of positions there as well. Okay, 4th of April, a little bit there, a little bit there. Okay, so that's kind of what happened. And yeah, so you'll be like, what should you be buying? Because at that moment, it was actually crosses more than 10, 18%. So you can actually use leverage at that moment because it's crushed between 18% from all-time high. Yeah, well done. So it crashes with more than 18% all-time high. So you can use some leverage. Okay, what stocks to buy? You choose some super high growth stocks that we talk about. Okay, super high growth stocks. I think a lot of you know about that. So let me just show you a little bit. Go to Chartmail. You can go to any website. You can go to FinViz. Any website is fine. And then you go to Screener. Let's do it very quickly. And then you want the sectors to be the right sectors. So let's do that. When you do the guidance every week, you know this, you put it there. PE ratio has to be more than 0 just because you want companies to be growing. And then you just put 30 on the growth. EPS 1-year growth to be 30. Next year to be 30s as well. And then what else do we have? Revenue 1-year growth to be 30. And then revenue next year to be 30s as well. Something like that. Okay. So out of so many thousands of companies, you get around 10 companies. Okay. It says 30 here, but Nvidia is now 3, so it's 1. Palantir is 3, 1. So because of glitch, it's around 10. So you just have 10 companies like that. So you see what happened. Lots of our students was getting in like that. So let's look at the chart so you can see what happened to the stock. So no matter kind of what you buy, so this is where you do, okay? When the market drop more than 18 or drop more than 10, only you do these super high growth stocks, 30% growth, okay? Year over year, you do this. If it is Amazon and stuff like that, you can add it when it's less than 10% drop, okay? When it's less than 10% drop, lowest PE ratio, you can do that. Yeah, I will show you why later on. You can see, because you will make more money. So for example, in April time, at the bottom just right here, or how do I know it's the bottom? The volume spike, first of all, volume was spiking just right there. So you can see the volume spike really beautifully just there. Okay, volume spike just right there. I will show you another volume spike kind of later on recently. And that's what happened. And free and grid was also at the bottom there. So volume spike, free and grid is at the bottom. Market let's see. Yeah, free and grid was kind of the bottom here. 8th of April, you saw that. Yeah, just there. And then our market valuation was also quite low there, just around 17, 15 there. Yeah. So just around that level, basically, just around that level. Yeah. You don't have to be precise, being a perfectionist like that. But let's pretend. So you were getting in there. You will see you getting in there. Let's say you get in there. This is like Nvidia. What price was Nvidia at the time? Says Nvidia there. That's around 80. Okay. Nvidia was around 80 there. You see from 80, it went around to 200 just right there. There's like 2.5 times your money like that. Okay. And then what else you've got? You got Palantir just right there. This is around 80s as well. This is the bottom. This is the April, exactly we talk about. And this is 80. It went around 20, around 2.5 times your money like that as well. And then you've got obviously a lot of your companies, you have a little bit of different one, but they are all good. Okay, they're all good, especially when you actually have to do the guidance. Make sure it's 30%. You double check it. And then this is around 70 to 24. You three times your money like that. Okay, 70 to 24. And then micron, Amphenol, you do the same thing here, just on the bottom like that. This way you close your eyes, and then you're around 60 to you times 2.5 times your money like that. Yeah. Amphenol, Marvel's the same, 50 to 100, two times your money like that. And Reddit would just be from 80 to 24 around there, which is right now, three times your money like that. Credo would just be around 60 to 200, four times your money like that. Yeah. And Nordic, Nerbius. So usually what we do, we buy at, so you can see people often ask me, when do you sell? With the high growth stocks, you sell it when with an extreme greed and when the guidance drops, hence you have to do the guidance. And when the market is overvalued, okay? So that's where you start taking out some of your positions as well. But if the guidance is still very, very good, then you kind of can keep them a little bit. So usually we will buy it here and then you will sell it just right at the top. Lots of our students sold it right at the top when the extreme greed happened, when the market very overvalued, when the guidance start dropping. Yeah. So that's kind of what happened. You do all of that Lumentum, crazy, from here, from 50 went to 300. This is like six times your money right there. A lot of our students get into Iron, get into Astera Lab, all of that beautiful stocks that we talk about as well. Cool. So yeah, so another filter, if you do, so basically you just have to make sure the guidance is 30% year over year before you buy. What do you mean guidance 30% year over year? That means this year and last year, their EPS and their revenue has to increase 30%. Okay, the business, their salary has to increase 30%. Yeah, and one more thing to help a little bit here, I also like this to be like, what's this? Be around, what is that? I can't remember anymore. It's be around two, so you reduce a little bit more. Okay, so that's kind of what happens. So so that means, let's do an example. So that means if you put 1K in, you can put £100, you can put £300, you can put whatever amount is. Okay, you put around 1K in, you can see that you times 3 of your money like that. And when the time comes when it's more than 10%, you can actually use leverage. And when you use leverage on the right platform like eToro, you can times 20 on eToro. On options trading, you can times 100 on option trading. But let's be very, very normal. Just do 10, okay? So 1K and then you do 3K. And then with that itself, 6 months later, you make 30K already, okay? 30K already, you don't have to use leverage anymore. Okay, you don't really have to use leverage if you got 30K. So what do? You times 3 again. Okay, you repeat the process because you sell at greed, remember, and then fear comes, you buy it again. You repeat the process, you times 3 again, you make 90K already. This is just in 1 year time. And then you do it again, 90K, you times 3, or maybe you times 2, you'll be like, oh, I miss this, I miss that a little bit, times 3, okay? And no leverage, sometimes you make even more than that, but let's make it very simple. 90 times 3, you make £270,000, Okay, this is 90K. Now it's 270,000 pound now. And then you times 3 again. 7 times 3, 6, 701K just like that in 2 years' time. A lot of students see how I achieved that on my account. A lot of students see a lot of our students also achieve that on our account. And then you times 3 again, you make 2.1 million. So you can see this is what we call as a power of compound interest. You keep on compounding it really, really nicely. The reality is after the first one, for example, your life is very easy. You just buy it, you go on holiday, people don't look at it anymore. They don't even trade. They just, when the time comes, they just buy, they just go in, they just do that straight away. Yeah. And a lot of students who've been with me for quite some time, they do it automatically like that. For apprentices, we do it together as well. Yeah. So you do it so what is a caveat here? What is a problem here? The problem here is that initially when you buy a little bit like that, yes, the first few minutes, you're going to see some negative. Oh, the first few you're scared. Oh, it's negative now. That means it's a scam. You're going to be negative initially when you first do anything. Baby, initially it's going to be negative. When you start a career, and for a lot of things initially you're going to go a few backwards first. But when eventually things is going to come out really nicely. Yeah. So let's look at what happened right now. Okay. What happened right now? So you saw we've been having this weekly call, for quite some time. For all of our apprentices. So let's see. So you can see we kind of told you. If I show you the recording, you kind of know that we say it's good to buy. Put a pending order on the 1st of October, 11th of September, or a lot of September. A lot of this support line here. So that's what you will be doing. You will be putting a pending order to kind of buy 10% of your positions there. Okay. So a lot of our students already got in a little bit, but if you didn't, that's fine. It looks like it's going to come down again really nicely. So you probably have another chance going on. There's always chance. I'm going to tell you right now, there's always chance. I'm going to say it one more time. Out of thousands of decisions that you're going to make, you literally just need that one time. Yes, what do you mean? So as long as you start with 1K or whatever amount that you have, 250 pounds, as long as you choose that one time to times your money big time like that, especially when it crash even more, we can even use option trading to times 100. But let's make it very easy, okay? I'm going to start with the smallest. Let's say you times 10 and then you times 3 of your money. Iron increased by 6, a lot of aluminum increased by 6, but let's make it very low. Times 2, times 3. 1K like that in 6 months' time with 30K. Yeah, 30K like that. Yeah. As long as you do that itself, the first time, your life is very settled already. Because with this itself, 30K to 50K later on, or even 100K later on, you will see that you actually don't have to do any more things anymore. You just have to, when the time comes, when it's really nice, you go in, you book our sessions, we do in together for apprentices. That's about it. Very, very normal. I have students who go on a yacht. I have students who are multi-millionaire traders and investors who have their own business or whatever that is. They're using our exact strategy where they don't even care about their business. They still do their business, but it become optional. They still do a little bit, some people still do work, but it become optional. They have the chances to do whatever they want. There is nothing that allow you to grow, compound your money like that. This is what we call it as a power of compound interest. Yeah. So let's talk about the recent one that we have. Okay. The recent one that we have here. Okay. The recent one that we have here, and it happens almost three times. Usually it depends on the year, 3 to 5 times a year. Usually happens like that. Yeah. At least 3 times, at least 2 times. Always happen. And you only need one chance. You only need to get in one time really nicely with the help to make it big, really, really beautiful. Yeah. Warren Buffett become the richest traders and investors around the world, not by making 100 stock decisions. The reality, he just made less than 3 times really, really nicely. Yeah, I show you the interview on my story. So you go in really, really nice just one time out of 1,000 times. So patient is everything here. Okay, patient and having discipline, having coaching is everything here. But anyway, so you can see, let's say you were on like the last time that we've got, you'll be like the extreme fear. Let's see. Let's say. Let's see. Okay, yeah, the last time we've got here, so you're like, let's see, 6 months. Okay, so you were like, okay, 11th of July, nothing going on. Nothing going on. So really something started to go on when we are at 6th of November. Okay, it's kind of 6th of November. You went down a little bit there and you added 10 of your position the 6th of November a little bit. And then around 13, 14, 17, 18, all the way to 22nd of November. And then it come out on, yeah, come out on around December time. So yeah, just around these levels as well. Just around these levels as well. So you can see using that. So you put around 10% of positions in like that. Market valuation, is it -6 like that? Let's have a look. Yeah, market valuation is just, where is it? Where is that? Where is that? Where is that? Market valuation. Yeah, market valuation, you reached around 6.9, around 10% of your position in like that. So that's about it. And the volume spike, do we have a volume spike? Okay, we have a volume spike here. We talk about volume spike all the time. Yeah. No, on the trainings as well, volume spike on the week 3 training, I think, the indicators training, volume spike there. So you add a little bit of positions there. Anyway, so we got that volume spike there. We've got the open insider is not crossing. AARN is not too negative. It's almost reaching 50, but it's not there. And then put and call ratio was high a little bit there. So you basically apply the strategies. VIX was apply a little bit, and you add a little bit in on there as well. Yeah, some students add a little bit in like that, which is good. But it's gonna come down again. It's gonna give you another chance again. Okay, so that's kind of what happened, and it almost happened very regularly and almost all the time. Okay, same thing with cryptos as well. I would recommend to put around 10% of your positions in crypto. Okay, crypto I will start to put position on when it is just below kind of like 85. You also wait for the volume spike. Fear and greed index also the same. When it reaches a level, you put a little bit in. For crypto, I recommend to put around 2% all the time. Okay, I recommend Binance and Coinbase. Okay, just to diversify your portfolio a little bit. Okay, for crypto, we don't hold forever. Usually for crypto, when it reaches all-time high, which is 120, we recommend students to sell it because crypto is very volatile. So you will always have a chance to buy it back at any time. You just can set a pending order. You sell it there, you buy it there, and then you sell it there, you buy it there, really, really nicely like that. Yeah, lots of our students make a lot of money from that, doing that as well. Yeah, really, really powerful stuff. It always happen. Okay, it always happen. So that is kind of like a that strategy is what I wish I've learned it earlier when I first started. Okay, when I first started, this is what happened, because this is where you don't have to do it every day. Initially, you are just learning it, you are doing it. You build your portfolio, you want to get in one time really nice, and then your life is almost settled. Okay, out of thousands of decisions, you get in one time, and your life is almost settled like that. Yeah, and it always comes back. Okay, it always come back. Market doesn't go up like that, like a rocket. You back test what we just show you right here for the past 100 years. Every single time you will see money making like that. It just depends on not you do it or not. Okay, that you want to act on it or not. Yeah, I make it very simpler for you right now. So I do a process of dollar cost averaging for you so that you start putting in rather than having this perfectionist mindset. Yeah. Do you think what we talk about right now is quite powerful? If you think what we talk about right now is quite powerful, type the word powerful on the chat box. Wait, because when you type it, you will use it. You will use it, you will remember it big time. I wish I could have gotten it when I first started. I will pay a lot of money to learn this. So, wow, Louis say powerful, Brandon say powerful, Man say powerful, Shivani, Yom say powerful, Sharing Ken is super powerful, Claire say powerful, Mel, Gary say powerful, Leo say powerful, Teja say powerful, Rich now, Ja, really, really powerful. Yeah. Otherwise, people will be like, oh, what should I do today? What should I sell today? They listen to their neighbors. What should I buy? They listen to their Uber. Should I buy Bitcoin now? Most people will get Bitcoin at the highest, 120. They will buy everything at the highest. They don't do market valuation. They don't study whether it's cheap or not. They don't do the evaluation. They don't know what is PE ratio. They don't even know any of that. But now you are even a much more powerful business evaluator compared to a lot of people on MBA. They spend 100K on MBA. I have lots of friends who study in MBA and they don't know any of this stuff. Yeah. So congratulations a lot of you for decided that you want to get to the best investment training in the world. I'm very, very proud of you. Now, let's get on right now. So let's see. I'm going to type what I'm going to type. So what about all these? So what about all these free signals that you are seeing? You know, they get in, they make money like that. A lot of these free signals that you are you saw people say, oh, free signals, buy Forex and stuff like that. You will see that initially they're making money a little bit, but eventually they will give it all back because free signals makes money by the provider. The broker have to lose money to give you the money. Free signals, you have to use their broker. So they use some MT4 doji broker. So with this doji broker, initially, when you make money, every $1 that you make, the person that provide you the free signal is losing money. So initially I lose money, but eventually they know you're going to go in, you're going to lose it all because you're going to put in the market and stuff, you're going to lose it all. But we are totally different. Okay. We are totally different. I have lots of people, I told you many times, I have lots of people offering or even do the MT4 platform, provide free signals for your clients, and stuff like that. And then when they lose money, you make money. I can show you all the messages. I get thousands of messages like that. People say, Raven, start a new trading platform, MT4. And then, go against all your students. We don't do that. We don't do that. Yeah. That will be really, really, really immoral. A lot of people are doing that. I don't know why, but we are not going to do that. Okay. You see all these free signals, they make money by you losing money. You will never be financially free from a casino. Okay. Because eventually you will come back and you will give it all back. Yeah. But what we do is very powerful. Yeah. What we do is totally different. What we do is when I ask you to buy stock, I'm buying the stock. I don't go against you. Yeah. When I ask you to buy this, to buy that, buy the stock, we ask you to buy. I asked you to buy Meta last week. We asked you to buy Meta last week. If you remember, Patrick bought Meta. Patrick, how much do you make? Oren bought Meta. How much did you make? So, I used to buy Meta last week, just right there. This is last week. Where's last week? Last week we just right. Where's last week? Yeah, last week, like right there, going in a little bit like that. If you didn't get to Meta, you can get to Meta at the pending order of around 600. Okay, anything with 600, put a 10% of your position in is also really, really nice as well. Yeah. And this is so powerful because you don't have to do it every day. Free signal, you have to wake up every day. 20 years ago, I have to look at my screen up and down, up and down. I don't even get to sleep. I just look at my screen all the time. But now I get to do anything that I want because my money is making me money no matter what happened. Yeah, no matter what happened. So I want to say congratulations for all of you. And you just have to do it one time. The reality of this situation, you just do it one time. You build a nice portfolio and you times 3 times 3 times 3 times 3 like that. Really, really beautifully. Even times 1, you are very happy anyway. Yeah. Cool. So that is kind of what happened. So well done for a lot of you. Now, let's talk about yep, in our one-to-one, we're going to delve more into that practically a lot more kind of later on. Cool. So what about all these earning guidance that you were showing? Okay, I was showing. Okay, so the first one is to buy this below 600 is kind of okay. Yeah, Meta below 600 is okay. And we were talking about the coffee trades and the cattle trade. A lot of people, as you say, Trump do want the things to come down. This is totally different now. This is nothing to do with this. Okay, this is like president kind of trading. Okay, this is like a little bit different. It's like a spare cash and stuff like that. When the Trump says something, we make use of it a little bit. Okay, so a cattle, a nice time to get into cattle, you have to look at the spike of the volume here. Okay, usually a spike of volume is a resistance line. I will personally be adding some position on here at around. If you don't do this, it's fine as well. It's around 2250. Okay, 2250. So when you come there, it's fine there. Yeah, coffees as well, waiting for it to drop because eventually a lot of these things is gonna drop. Yeah, eventually a lot of these things is gonna drop. It's just the matter of time. Obviously, if you get to the resistance line, it will be really nice. Okay, you can see I put some pending order there. Yeah, resistance line there will be really, really nice. This is just 400. Wow, 400 is really nice. But sometimes even 39 is also quite nice as well. Yeah, because this coffee and things, Trump do want the inflation to come down for coffee and cattle as well. Okay, so that's kind of what happened. And then what's the point of us doing the guidance? Okay, it's because we are doing the guidance so that when you choose your super high growth stocks later on, you have the 30% and 30% and 30% in like that. Okay, you have a 30% and 30% in like that. So let's have a look. Well done, Pat. So you have a 30% and 30% in like that. So year on year 30%. So you will only know this if you do the guidance in a very rigorous in a very hardworking way. Yeah. So that's kind of what happened. And when you want to know when to sell, a lot of the times the guidance is the one that tell you when to sell. Okay. We have one called Affirm later on. It's one of our 10 baby stocks as well. It's been going up big time. Students make a lot of money. Buy it just right at the bottom here. 3, it went all the way up to 9, 3 times your money like that. And ever since the guidance comes on here, when it's lower than previously, students sell it straight away. They go for the next one. You wait for the next stream, they sell it straight away, and they make 3 times their money like that without doing nothing. Yeah, just wait for the guidance to come. So knowing how to do the guidance for this reason, because people will be like, why are we always looking at guidance? Guidance is a tip. It's a tip where companies usually give it to insider. Usually they don't give it. Usually they only tell their cousin. They tell their closest people. They tell their people that they met. I went to Nvidia. I went to this Jensen Huang 2 weeks ago, 3 weeks ago. And yeah, there's some secrets going on. Talking about things that a little bit of like that going on, and you get, because everyone get to ask questions. You get to ask questions like that. Usually it's only personal people get to ask, but they make a rule. They make a rule where you have to tell everyone. You have to be fair. So they come up with something called guidance. Yeah, many years ago, there's no guidance. Guidance is something where companies, rather than just telling the analysts, like just telling their friends and family, they now have to tell everyone. So this is why we are studying the guidance, because that's what's going to make you a lot of money. Yeah, we talk about the guidance. Let's have a look. Coals, last week we look at coals. So a lot of our students get into coal. They say they went up quite nicely like that. Some students get into Dells as well. I don't know who going to Dell. Yeah, going to Dells as well. From a few weeks ago, you went up like that. Like that as well. Cool. So now it's gonna go to your homework right now. Okay. Those who don't know how to do the homework, that's fine. Just watch it. So now we're gonna do the homework right now. Okay. The homework, as you say, all right, Raymond, what's the purpose of doing the homework? Okay, I'm gonna tell you right now. Okay, I'm gonna tell you right now. So the guidance homework, there are 2 types of guidance homework. Okay. The first guidance homework is you want to treat like a salary. You treat it like a business. Okay. If you see the guidance is a big change, okay? When the guidance, suddenly more than 10%, 20%, 100%, that's where it's good. Because if your salary increase huge, you want to buy, you want to stay in the company. If your salary decrease big time, you want to sell. That's the whole concept of the guidance, okay? Don't complicate yourself with Q1, Q2, Q3, Q4. I know it can get complicated, but just pretend it like a salary if it is all your business. If next month guidance, next quarter, your boss say, I'm going to pay you 10% more, obviously you're going to be quite happy. If next month you'll say, going to pay you 10% less, you're not going to be so happy. Okay. So that's the first part. You find something that increase huge and then you submit it. Usually we want you to place a trade straight away. Yeah. And then the next part is 30%. Okay. That's part of our financial freedom strategy. So you go through year on year, 30%, when it comes out. So when you found one, you put on your watch list. You put on your watch list. Where is that? Yeah, 30% year over year. So you put on the watch list. Okay. Really beautifully like that. Yeah, you put your watch list really beautifully like that. So you put it on because when it's extreme fear, when the market drops kind of later on, that's where you will buy it straight away like that. Yeah, very beautifully. Cool. So now let's look at some of your work right now. Annie is asking about there's some valuation lag. Do it the day after. That's okay. Yeah, do it there. VIX, there's no valuation lag. Put and call ratio, also no valuation lag. I think it was only this market bounce where we've seen it was negative 20th. That's okay. You still can get in around 10 as well. Well done, Mel. No, you're only sending to yourself. Okay. So if you've done your homework, just send the link to host and panelists so I can see your homework. Cool. Let's look at Louis. Cool. Nice. 1st of December. Okay, awesome. So this is where the homework comes now. So Mongo, for example, 1st of December, really nice, very clear. Full year data right now is 2.4. Okay. Sometimes it's good to know the percentage straight away. And then the full year last time is 2.34. So it's a little bit increase on the revenue. That's okay. But the non-gap is quite big. 321 to 436. That's quite a big number. Yeah. Net income 3 to 4. That's also quite a big number. So how do you know the big number? You use 4 divided by 3 is 1. 1 divided by 4, around 20%, I think. Okay. Here is as well, use a new number minus the old number divided by the old number. 436 minus 321, it will be around 100. 100 divided by 4, 100 divided by the previous number, old number. So it's around 30%. So this is quite a huge increase, Mongo. Yeah, students would have already bought it in when? 1st of December. Today is just there. Okay. 1st of December, just right there. Okay. So what we usually do, we usually draw a graph here. So you can see last time, has this boss give you 30% increase in salary before or not? If it did, then you can have a look and see what happened. Okay. So that's kind of what happened. Yeah. You want to see if he has given you 30% of salary before. So that's why you go back in time, you have a look. So let's have a look. This is 2.2. This is 2.6. So last time from 2.6 to 3.2 is around 50 million of the money. 50 for 50, 25%. 2.1 to 2.6. So it looks like it's always increased a little bit already. So this time is just 100 million. So that's quite a lot. So 326 to 321 is around 60 million. Now this is 100 million. So 100 million is quite a lot. We never really have 100 million before. And then the next one is net income, 3 to 4. Okay. So usually when students do it, they'll put on the trade count straight away. Yeah. So that's kind of what happened. Would I be doing this right now at this moment in time for this stock? Usually I will want to buy a lot of this during extreme fear time. So a lot of the stocks that you do, it works very powerful. If you do the homework, it's very good already. So and you just want to get in during during extreme times, especially buying. Yeah. So let's see what's S&P 500 doing right now. It's kind of like an all-time high right now. It's very ambitious if you want it to continue to go up like that. Yeah, it's actually very ambitious. If you want to go out like that. The good news is you don't even need to know whether it's gonna go up or down. All you need to know is when it comes to the place that you want, that's where you click your button. Yeah, very good. I love this. Draw the graph will be even more beautiful. And that, let's have a look. Um, So net revenue is 19. Okay, this is estimated. Okay, estimated is good, so it's still guidance, yeah? So 19.8, previous was 19. Okay, so increase a little bit, 0.8. The EBITDA now is 2.6. Last time they don't really say it. That's fine. We expect revenue 16, revenue 17, revenue 19.8. Okay. Too short because Q4 net revenue versus last year was down. This is fourth quarter. Okay, let's look at the full year. Full year is better. Full year is 79. Full year is always better compared to that. 79. We don't really see what happened there. Don't really see. Don't really see. Don't really see. If you want to short, you kind of want everything to come down. Okay, you want everything to come down because these actually increased revenues 17 to 19. It's actually increased to 19.8. Yeah. last year, last time during the winter time, it was 21. So you went, this is revenue. Okay, it did went down a little bit there. Okay, cool. Interesting. This is MTech. Yeah, MTech like that. Because if you look at it from 17, this is August to 19, it went up to 19.8. If you want to show, you want everything to come down. Very, very good. Let's got this 230,335. Wow, this is huge. Let's look at this together. So 59, this is actually one of our baby stock, 59, and then 58, 65, 115, suddenly double. When double revenue, when a business double their revenue like that, wow, that's where the gold mine happened. Okay, it's just not 10%, it doubled 65 to 115. Nvidia also doubled in 2020, 24, and 2023. A lot of our students got in as well. This is good news about doing the guidance. When you see things double, you'll be like, wow, that's where the money is. Okay, 65 it doubled to 115. And then what else? 51 to 50. This is your expenses. That's fine. And then 115 to 155. So just remember the September, okay, December it double, yeah? So December? I think this is different year. December 2024, I think. Okay. Anyway, so this is March 155. This is 185 times 30. And then this is times 50 million more. And then now 100 million more. Crazy. Okay. So you wouldn't have sold this stock. You continue to, if you already bought it since from the beginning, when you buy during extreme fear, you buy when market valuation is cheap, you buy when volume spike, you buy when the market crash more than 20%, 18%. A lot of students already own these as well. And now it's just right there. So you continue to do really well. Credo, let's have a look. Yeah, every day it went out like that. Crazy. So, yep, this is why you do the guidance is all already here. So a lot of people got in there and then we spike up like that. Okay. So remember, we don't buy straight away. If you want to buy stocks, you do the same thing. All of this makes sense. All of that, all of the 10% makes sense. If you want to buy individual stocks, it has to crash quite a lot, 10% and 18% like that. Yeah. So very, very good. What is that? This one is this. Okay. So cool. Let's look at this city trend. We will still be buying that Cradle, but it's just waiting for, to come down a little bit. So let's look at this city trend. Let's look at the numbers. What's the number? Full year EBITDA is like a net income, yeah. It's 10 million. Now is 7. So it's also increased a little bit. Let's look at last time. Last time is 6. And then now is 5. So it increased quite a lot recently. Okay. EBITDA almost increased from 7 to 10. We never really seen that before, according to what we back test. High single digit. Okay. A full year sales high single digit on the high end of the previous outlook. It's still on the high end of the previous outlook. It will be nice to be away from the previous outlook. Okay, so that is surprising. So city is fine as well. Is your city what? City trend? City trend. You can see it spike up massively like that. It's just a small correction going on. Yeah. Let me show you properly. Yep, just massive spike like that. Cool. So yeah, remember high single digit, high end of the previous outlook. We want it to be away from the previous outlook. Yeah. So otherwise, it's just reiterate your outlook. Yeah, we want to be away from outlook. Well, very, very good. I love that. It would be nice to have some shorting. So the next one real quick. Just send it to hosts and panelists, you'll be fine. Cool. So arrowhead, let's have a look on this beautiful one. It would be nice to have some graph there, but it's okay. Let's just take this. Pharmaceutical, nice. Expectation going forward, nice. Okay, let's see. What is this? Q4, Q3. Is this guidance though? I don't think so. It looks like a guidance though. Make sure we have looking at guidance. You go to the market screener and plot the guidance properly. Seasonality. Yeah, we don't take earning data from there. Okay, you have to do the guidance manually. These are not actually very accurate. You actually have to do it manually. Yeah, very good. You actually have to do it manually. So the week 4 training. Um, yeah, nice. Good to see the guidance. So it increased quite a lot, isn't it? From let's say 3, 5. Wow, this 100 times your money. So when you 100 times your money like that, look at 2.5 million to 500 million. One off likely licensing, okay. And then to 27, and then there's an increase like that. So you want to know why? What's the reason is jump big time like that? Yeah. Let's look at this Q2. We look at the dates as well, so we can back test to see what happened. Because if you want to buy now, you want to see last time if you bought what's going to happen. Okay. Cool. Now, what else? Let's see. Very good. Just need to draw the guidance graph by going to company's website directly. The next one that I'm going to look at right now, summarize chart, it makes it easier to read in the bottom of the chart. Okay, let's have a look. Really good. Bottom of the chart. It's bottom though. Right here. Very good. If you can see this nice, it's really good. It's just that I wish this is actually this is guidance, yeah. So here's what currency, bottom of the chart. Very good. Well done. Keep it up. Really, really good. So the next one. Let's go to adjust. Request access. What's this? When you give me the link, you need to give me access, guys. Oh, this is nice. Let's see. This one. What is this? Beautiful. So let's look at someone else. Mira, I think Mira done it just now. 25th podcast. Okay. So let's look at this. We want the guy. Okay, the guidance is here. That's the only thing I'm interested. Guidance, revenue 56. How about the one before? Can't really see the one before. You can't plot the one before as well. Nice. Let's look at this. Unsure. Okay, beautiful. Okay, let's look at this real quick. So go report all of that. For the 9 income was compare. Good. Don't find any EPNs, but stock increased 20%. So we want the guidance as well. Very good. Was is not a guidance. Guidance is something, it's a secret. So it's the future. Yeah, very good. Let's see the next one. Mongo. Race, that's very good. And then the previous was 3.4. Yeah, 3 to 4. This is good. This is potentially a buy if it's not at all-time high. Okay. Mongo, when we see, is actually at all-time high a little bit. Yeah, it went out really nicely. Yeah, it's actually quite high. I want to wait for it to come down to extreme field time to buy a lot of these positions. Let's go back. I love this calculation, 33%. Well done. You really know how to do the calculation. Really good. Nice. And then what is this? 2nd of September, United Natural. Continue to expect 1.5. Net sales 31. New minus old. So what do? You use 1.5 minus 1.95. Where is that? Okay, let's accept the number. Okay. So normally you would just minus like that. Yeah, you can just minus 1.95 minus 1.5 with 0.45. You just use 0.45 divided by 1.95. So that's around 50% increase. It's still big. It's still a buy. And oh, this is before 1.95. It's like that. So last time you used to lose money, negative 1.95. Actually, not negative. Is it negative? Okay. EP, okay, negative, and then now it's positive. Okay, if it's positive, then it's big. Yeah, negative. Yeah, that's 176. Okay, I accept the calculation. The full year EPS is 1.5. We need to know the one before and 2.3. So, uh, okay, let's talk about how the calculation comes, okay? Full year minus EPS. And then you minus, okay, new minus old. So the new is 2.44, which is here. And then you minus 3.66. And then you divide by 3.66. Where's 2.44? I think maybe we didn't put the old number in. Yeah, I'm trying to find certain number. 1.5 is here. 1.95 maybe is this one. Okay. Is this a previous one? Okay, I accept. Let me accept your calculation. I'm just trying to see what kind of calculation that is. But as long as you know it's new number, minus the old. Old means the previous same numbers. Okay, it has to be EPS as well. So the new EPS minus the old EPS divided by the old EPS. Yeah. So you get 176, and then this is EPS, full year EPS 1.5. I think this is the numbers that you got. Okay, once so it used to be negative before, but it says reaffirm though. Okay, let me just click on your link to see annual report. What is this? Presentation. Okay, let's look at the presentation real quick. The date second, very good. Result, driving like that. EB5, affirm. Reaffirm means it's actually the same. So what happened here is that now is 1.5, increase of 1.2. So it tells you how much is increased, like one point increase of 1.2 at midpoint. Net sales flat to midpoint, increase of 20% to midpoint, increase of that, increase of that. So we need the guidance before as well. Okay. So I'm going to show you how to do the guidance before. You type natural food investor and just click on that. And then what do you do? And then you go on, we have Q1 already. So what we want will just be, so we've done the Q1. Let's do Q4 now. Let's just do presentation again. This is in the year of August. Hopefully, but let's see. September. Okay. So you go back again and you compare between these two outlook. So it's 1.5. Now it's kind of also 1.5. Hence they say reaffirm means it's the same. Okay. So the outlook is the same. Compared to last year was in line, compared 20% EBITDA at midpoint. So it's a bit of increase. So it's okay. Let's look at the stock a little bit. Natural food. Yeah. Natural food like that. Cool. Yep. So what is the meaning of reaffirm? I'm gonna just draw it for you real quick, okay? Most people do not understand this, so I'm just gonna draw it in a way so people get it, okay? Read it very carefully. Remember our strategy says year over year, one of the financial freedom strategies, year over year has to be 30%, okay? Then you will buy an extreme fear, okay? Then you buy an extreme fear time, okay? When exactly what we talk about that. So when it's 30%, but when it is we talk about quarter to quarter, 10% as well. Okay, quarter to quarter has to be 10%. So when that happens, because one quarter is 4. So normally year on year is 40% as well. Okay. Let me tell you what usually happens. Usually, let's say you are in Q4, you will be saying that, okay, I'm going to make like 1 million. Just make it in simple. And then you go to Q1 again, the full year, you're going to say you're going to make 1 million. So these are the word reaffirm. They reiterate, reaffirm, the same thing, 1 million, 1 million. And then suddenly Q4, they put 2 million. So even though all of these are reaffirmed, but if you compare 1 million to here before 1 million is 2 million. So it's still increased year over year. So our strategy is if it's 30%, now it's 100%, which is good. If it's 30%, then we will put on the watch list, we buy an extreme fear time. Okay. So what about the 10%? 10% is when Q1 and Q2 and Q3 and stuff like that. If they give you quarter to quarter sometimes, if we say 10%, is quite good there. Basically, treat like a salary. If it is huge, it's good to buy. If it's not so huge, then it's okay. So let's study this a little bit. So if you study this, you will see the latest one. First, they reaffirm the outlook. That means that Q3 and Q4, they nothing special, but it's still very good compared to a year ago. Okay, because it increased 20% in the EBITDA. Okay, net sales was flat at midpoint. Net sales was the same. EPS increase of 1.2 at midpoint. So if you don't understand what that means, you can use ChatGPT. And then all of that in line, increase of 60 million in free cash flow. 60 million in free cash flow. Okay, that's quite a bit as well. But what I really want, I want the net sales, the revenue to increase 30% to go all in at extreme fear time. Yeah, because you will see that if you buy things that increase 30% and extreme fear time, you will see that you make let's see. So this is around 20%. So let's see, extreme fear, which is around. Okay. So if we draw all the graphs on, then I can show you why. Because an extreme fear time, you want to buy stock that's going to go up more. Okay. This gone up like, from 2.5 to around 3.5 like that. Around 30%, 50% of your money. That's okay. But we want to grow a lot more. Yeah. So this is why we want the difference of this to be even bigger compared to last time. That's what you're doing is really, really good. Yeah, at least you know how to calculate and everything, which is good. Now it's just about plotting the graphs a little bit, yeah, and some hand holding, and when the time is right. Really good. Let's see who else have we got. Let's open this. I'm gonna open Perjas again. Let's see if I can open now. Perjas, you need to give me access. Yeah, just call on setting and click share to all. You'll be fine. Really, really good. I don't know what is this. She, okay, so she. Okay, thank you. You're welcome. And Louis, well done, Patrick. Just join. Awesome. So that is kind of what happened. Okay, let me show you how to do it for those who are new. You'll be like, oh, can you show me? I'm gonna show you right now. Go to market screener. Yeah, go to market screener. And then you do what we do there. And you just go on, let's say, companies, you go on guidance. And when you're on that, you will go on guidance. Okay. So that's where you get all the guidance from. So this is where you do it one by one like that. Okay. You do it one by one like that. Let's see. Yeah, you do it one by one like that. So because we think the market is a little bit too high, let's go to profit warning. Let's get some one buy and one sell a little bit. Big cut guidance, okay? Cut guidance is where the money is. Okay, we're gonna click renew. Updates guidance. Let's have a look on that. Share fall. Beginners, yeah? This is where we start. Dig spotting warn could cost lowest target price. without intervention, all of this November, lowest price target, narrows earning guidance TCM, um, issue profit warnings as revenue to fall by 10. Let's look at this. Annual, narrows earning guidance, updates earning guidance. Newton warns of higher full year loss, revises guidance, and low versus guidance, revises guidance. 19. Okay, cool. Let's do this. So revises forecast, downgrade. So we need to know the numbers. They didn't really say the number. Oh, okay. So let's see. Let's see what they say. Cut US tiny hit outlook. Estimated gross effect of 15 million, 30 million, 9% of under EB. Okay. 9% is still quite low in terms of the change. You know, from zero net sales now is to -1, 15 now 13, 240, 210. A little bit difference, a little bit change. Potentially, not like huge. For EU company, they teach you how to do DCF. So you can see they say that decrease in DCF due to earning, please refer to EPS. So last time used to be 65. They think that the fair price of the stock is 59. What's the stock price now? 47. So it's kind of low already. Surgical sciences. Let's see at this. So the first one you don't read, there's no numbers. Second one, no, you don't read. The third one, negative impact compared to 2020-25. So we need to know what happened in the past before. So you have to click the company name and go to the company individually to see, type on Google to see what happened to the earnings before. Warns reset. This is nothing. This is just warning. We want the guidance. Narrow earning guidance. Narrow means decrease. Let's see. 1250, 1260 is very similar. Okay, when the salary is the same, you'll be like, expect to fall, nothing going on, under 10%. So not huge, okay? Not huge. Business, narrow outlook, didn't really say the number. Yeah. Sometimes when they don't say the number, you have to go to the companies individually and find it. Earnings were not negative, stable, and things like that. Updates earning guidance. And what's the number? Projected has shifted from a surplus to a net loss. This is quite a huge number. So I'm just going to copy this. Okay. ABO Energy. Okay, let's copy this. This could be one of our watch lists. Just going to put it in there. The day is 2nd of December. Okay. So based on that, because it project like that, began market development progress faster. So let's read it. What companies is oversupply of solar, oversupply of wind. The adjustment valuation minor impact, one of the largest pipelines, forms foundation. Okay, that's fine. So you can see it used to be what? Positive 29. to negative 95 million. Okay. So a lot of students who've done the homework would have kind of short it on the 21st. Let's see if I can find that company. Able. Okay. Sometimes if you can't find on one platform, you can go to another platform, okay? If you can't find one platform, you can go to another kind of platform. So it's been going down like that. Cool, cool, cool. Let's see the whole thing. Okay, it's kind of all-time low. Awesome. Let's go to the next one. Mayats. From 41 to 400. That's very small. Previous was 3, now was 1. Let's read this carefully. Revised earning guidance, the past a thing with a persistent core at the same time positive momentum, but was unable to compensate that proved to be subdued. Given this, management now forecasts group revenue 1 for the full year, previous 3. So they decreased a little bit of the full year from 1 to 3. Some students who already showed this on the 19th of whatever that is, 19th of November as well. Did we do this? Yeah, 19th of November, you can see stocks been coming down crazy like that. Yeah, you went up first and then you come back down like that. Oh, you can try on eToro, you can try on different kind of platforms. Okay, cool. So what we normally usually do, we also back test it a little bit to see if last time when the situation like that happened, if the stock actually went down. Okay, that's why you're plotting the graphs. Let's look at the next one. The way how we found Nvidia is here. We found Credo here because we put the earning guidance. Yeah, we found some really big stock just going through like that very quickly. Says lowers the guidance with EBITDA 75. What about before? So we don't see the numbers before. Nope, fix the company growth to be 1% against previous revenue growth to 1 to 3. So right now is 1, previous 1 to 3. Reduce market. This is government reopening and stuff like that. So it's not really due to the companies itself. Newton Resources expect like that. This is Hong Kong, down. Didn't really say a lot of stuff there. A, B. Okay. Cool. So yeah, let me see. Let me see who's done it. Access already given. We are buying Credo. Cool. Awesome. Let's have a look. Let's look at Tejas when I answer your question. Let me see. Tejas. Do, 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 do. Well done. Okay, let's have a look. So we are in extreme fear now 24, we have to be around 20. Yeah. Hence, I recommend to put a pending order. Okay. Put a pending order, exactly what we talked about just now. Let's just repeat that one more time. Yeah. So right now we are there, okay? But when it comes to here, the support line 6.5, that will be kind of okay to get in a little bit. You can get into meta at that moment, and it's coming, can get into even exactly what we talk about, the VUAA, the IGUS. Yeah. Make sure you have a little bit in there. Every time you come in, you put a little bit in like that. Okay. Put a pending order in. What price? Just a support line there, just around this kind of level. Yeah. Do on your non-leverage one. Sorry. Do we look for selling stocks now? It hits extreme fear. You are right. Do we look for buying stocks or selling stocks right now? The reality is that we because of the fact that market is kind of in the middle. So in order to know, do we look for buying or selling stocks right now? Because of the fact that the market is kind of in the middle. Last week we were doing a lot of buying stocks because the stocks is at the bottom, last week. So last week a lot of stocks are buying. And for this week itself, when we're doing practice like that, because it's kind of in the middle, so chances are it's kind of so we just want to balance our portfolio where we have one buy and one sell. Yeah. That's kind of what happened when you are practicing it. Cool, really good. Love that. Awesome. Did you attend the training in the beginning? I'm gonna send you a recording of that as well. I love it. I love it. And remember, guys, even though the stock is the best stocks in the world, like I don't know what that is, best stock in the world, you found a gold mine stocks, it is gonna best stock in the world. We also stick to this strategy. We don't just buy like that. Yeah. And unless it increase really, really big time, like you never seen before. Okay. Like what we saw just now with Cradle, usually you are right, 100%. We will just go in and buy the stock straight away. Usually we Cradle. Okay, let's go back to Cradle just right here one more time so you can kind of see it. Someone did Cradle just now. Do, 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 do. So you want to see if it increased big time like the world has never happened before. Yeah. So that's kind of what happened. To be really super safe, to be super, super safe, that's kind of what happened. The thing is, even if you buy it at very, very high price, okay, because our strategy is so powerful. Even you buy at a very, very high price, if you do your analysis, the EPS, everything is doing great. You buy the high price. It's just that what happened here is that temporarily, the higher price that you bought, for example, you bought at what that is, yeah, here. You buy it like, you know, let's do a Corona crash. Let's say you bought it just right at even 2008 crisis, okay? You buy at the crisis. I would still say well done to you, okay? Like you bought just here 3rd of January, okay, you bought the right stocks, the one increased big time, you bought it just right there, even though it went down like that, temporarily, as long as you're not using leverage, you are gonna be fine. If your patient is good enough, because eventually it's gonna come back up big time. So even though you want to buy it straight away, it's okay, but it's much better and much safer to buy right at the bottom. Why? Because the best stock in the world in 2008, Apple, Nvidia, whatever that is, all went down. So when S&P 500 come down right now, if it comes down, Cradle is going to come down as well. Palantir is going to come down as well. So this is why we stick to that. When market valuation is cheap, then we will do it. When open insider and cross and stuff like that. So I say put a pending order. So if you ask me, Raven, can I add Cradle when it's at the support just right there? At this moment in time, what I would say to you is that our fear and greed index would have been on extreme fear. Okay, would have been extreme fear there. So you can add big positions in there. And at this moment in time, when extreme fear, when our VIX, when all of that, our VIX or open insider, anything like that, VIX, you can put a little bit in like that. Yeah. But I will go all in. I will use some leverage, go all in when it decrease 18%. S&P 500 decrease 18%, 20%. Then I will use some leverage in. I will even do, options trading in, and option trading, you put £100 and you can make like 10K like that, £100, 100%, even way more than that. Just like that, when I'm like that. So that's kind of what happened so all of this will have to make sense as well. Okay. So because yeah, that's kind of what happened. So hope that helps. Cool. So let's look at the just part. You can book for your one-to-ones as well. No, right? I think we You are due to have one anyway. Cool. So let's look at okay, beautiful. So really good. Let's have a look at this. So you will have here 5, you get here 5, you have here around 6. Okay, 5, 5, 6. That's good, but it's just a little bit increase. Yeah, 5.6 to 6 as well. Okay. What else have we saw? This is Cradle. Yeah, you saw that just now. So you look at it, see if Cradle increased 100% or not. The thing is, even though Cradle right now is increased by 100 million, look, it runs from 2, 3. Let's do it one more time. Oops. Anyway, the graph disappeared. Okay. 2, 3 to 3, 3, 5. This is 100 million. But you look at what happened last time. Last time was double. If you look at it carefully, this is not something that has never happened before. If something has never happened before, the double, like 100 million never happened before, then we'll be like, wow, really, really good to look at. Yeah. And to go, really to buy straight away, especially. But because it's not never happened before, because last time it used to double, used to from 60 double to 120, used to double. Now it's not even double, 230 to 300. It's not double. It's not like the biggest that the world has never seen before. This is why plotting the graphs is so important. Yeah. So, but Cradle is still increased year over year 30%. What do you mean? Look, 335 last time was just been 1, 2, 3, 4, 5. Yeah, last time was just 115. Okay, it's Q3 to Q3. Yeah, 115 to 335. How much increase is this? This is like times 3. 1 times 3. Yeah, it's around times 3 of their revenue, 300% of their revenue. Not many businesses 300. This is easily way more than our 30% criteria that we are looking for just now. Because of that, this is a stock that you must buy. A lot of our students already got it on extreme fear time. Okay? Because that's where your money will grow. Yeah. And a lot of stocks like that, when it comes down fast. So we don't buy at the top of the top, because when it comes down, it can come down fast. Nvidia, when it dropped fast. Okay. A lot of people bought right at the top and they ask why are they not doing well, because they bought right at the top when it come down fast. Yeah. Really, really good. I love that. Love that questions. It's a little bit more detailed. Okay, it's a little bit more detailed. Nice. Let's look at Signet real quick. This is just 465, 445, 430, 420. So it's also increased a little bit there, but not huge. 445 to 46, a little bit there. 63, a little bit there. Well done. We just want something that is huge. Okay, awesome. Nora say thank you. You're welcome, host and panelists. Awesome. Cool. So this is what happened. Yeah. So what I'm looking for at this moment in time, I am personally looking for this guy to come all the way down. Okay. I'll come all the way down. SV5 to come all the way down is just right here. I hope you do some pending orders on. Meta is good because of the fact that the PE ratio of Meta is still quite cheap. Out of so many stock, Meta is probably right now one of the cheapest stock. It crashed 20%. Now it's 18% now. Yeah. Not many stock crash like that. And yeah, that's kind of what happened there. And we're still waiting for coffee to come to the place, and we wait for cattle to come to the place as well. Remember, in life, you just need one really, really good one, and you start adding positions in, and your life is settled like that. You don't have to do it every day. You don't have to do it every minute. Once you got in, you look at so many of our students sharing their testimonies because they already got in long time ago. They go in one time every day. You have testimony because why? Because people make money every day. They share the portfolio every day. You don't have to go in and out every day. You go in one time, really nice, and then every day you're gonna be seeing things like that. Yeah, awesome. Well done. That's it for now. For yeah, really yeah. So for apprentices as well, when the time comes, you're gonna book for a one-to-one. Don't be shy. Go to your email and just click the one-to-one if you're on apprentices as well. So I'm very, very excited for you. Cool. So that's it for today. So we have Mel saying hi, Mel saying well done, you're welcome. So take a screenshot of these as well. Yeah, we got Mel, we have Ami, we have Amy, nice. We have Aunt Aries, Ami, we have Bobby, we have Brevy, we have Kelvin, we have Carmen, nice. We have Chris, Claire, Chris, hope you are doing well. We have Hajin, we have Harriet, Jack, we have James, long time. How are you, James? Janos, we have Jay, we have Jenny, we've got John, we have Ken, we have Kim, we have Lakshana, we have Laura, Leo, we have Lizzie, we have Louis, we have May, we have Mess, we have Mo, we have Ama, Nijala, Nomi, Nora, Ulu, Pat, Patrick, Reshma, Sam, nice, we have Shireen, Stan, Suki, they're just saying, Ari saying thanks, you're welcome, David saying nice one, and Chris saying brilliant stuff, you're welcome, Success saying thanks, thank you, I'm doing more better understanding this. You're welcome, Naomi. You're doing really, really well. Yeah. Awesome, everyone. And I will speak to you very, very soon. Like someone saying, thank you. You're welcome, Naomi. Could you address my US market valuation? Okay. Okay. Let's do the US market valuation. So students are saying this is a bit lagging. Okay. It's a bit slow. Let's do it one by one. So you can see 17 is 4.5. And then suddenly from 17, 19, 4.5, and then 20 is 6.9. It's still okay. So if you saw that 6.9, you still can do on a 6.9. Like today, like for example, you see it's around 2 point. Oh, it's a bit lagging. I think I get what you're saying. Okay, I love what you just said right now. Okay, let's refresh one more time. So it lags a little bit there, 2.6 November. Let's float. Wow, I love what you just said. So let me see. I see. Cool. So so it looks like you might have a delay, like Open Insider, you have a few hours there going on as well. So this, it looks like I think I get what you're saying. So you have a small delay going on because by the time you look at it, so if it's on the, let's say, 21st, by the time you look at it is around 24th. So you then do the delay way. Yeah, a lot of our students do the delay way. So let's see what's gonna happen on a delay way. So we've got the VIX was spiking a little bit there. Just a small one. If you miss out that one, it's a very small thing. Okay, so let's have a look. So it's not really something huge. So this is 21st of November. So you can see there's a resistance. Last time it's 17th of October as well. So let's go back. So if you miss, let's say, the small one that you saw, like here, you came down, you missed this, it's fine. You came back down again. So this is not a huge one. So you usually came back down again. So let's talk about this 20th of November. You saw the VIX spike. Yeah, you saw the VIX 20th of November to the resistance line. When you see it spike up like that, 20th of November, 21st of November, it spike up like that, you'll be like, okay, above the previous resistance, you'll be like, okay, let's just do a little bit things, yeah. Let's just do 10%, 5%, a little bit in like that. So you will, it's like this where you add your position in, and then 23rd, this is Sunday, and then this is kind of 24th, a little bit in like that. So these are 10 positions kind of adding in here. Oops, what just happened? Yeah, so 10% is kind of adding in here like that. Okay, there's a VIX put and call ratio. I don't think so. There's a delay on that as well. Let's see. So you draw a resistance here. Let's try to draw it there. Yeah, so you will still dollar cost averaging a little bit. Okay. Yeah. So kind of just right kind of there at that moment in time. So let's just try to draw a proper resistance line. So because it's quite low, but let's do the April one was here. Okay. So that means that when this time comes here, you don't want to miss that out. This is where you can use leverage. This is where you really click one time and things comes into you like the world has never seen before. Yeah. So these smaller bumps is okay. So you add a little bit of smaller bump, kind of a little bit in there, 10% of your a little bit in there. So because it's crash less than 10%, so this is what we recommend. We recommend to buy things like here. So this is like the one that's low, that's high growth. Meta still have quite high growth, still more than 10 to 15%. How do you know the growth of Meta? On finviz.com or ChatGPT, they're going to tell you. And then the PE is still quite low compared to its competitors or historically around 20 something. Usually it's around 30. So Meta is okay. Or you can buy VUAA, IGUSEEQGB. Exactly what we talk about there. So you just dollar cost averaging just around that kind of line. Yeah. And then you look at the volume spike. Remember the volume spike? Where's volume? Yeah, the volume spike there. You add 10 position when the volume spike just right there. You see a volume spike on a November, on the Thursday, just right there as well. Yeah. So when there's another volume spike, that's when you want to get in stock. Yeah. I personally think it's gonna come back a little bit there eventually. Yeah, or it's just gonna go sideways for quite some time. Like what happened last year, you just gone sideways. You're going sideways for nothing, just like that. Yeah. So yeah. When things spike up big time, where it almost does every year, like you can see, when things spike up really like that, like that, which is what we are waiting for, just a little bit there. This is where life changed like that. Yeah. Awesome. So sit tight. You don't have to go, yeah, sit tight because things is gonna come really beautifully. Thank you. I will put Shiva. Also, when you take out adding position, does it mean big growth or is it just ETF? Yeah, Suki, love your questions. It depends on how many percent it dropped from all-time high. It's dropped 10%, then you do the index. If it's more than 10, then you choose the super high growth one. It is more than 18, you can use leverage as well. Yeah, awesome. So for apprentices, then you can book for your one-to-one where we do a lot of things kind of together. Awesome. Cool. If anything, let me know. I will speak to you guys very, very soon. Take care now. Bye bye. Awesome. An is asking, what do I think about An FTSE All ETF? I think it's good, An. Very good questions. I think it's good. Are you still here, An? Yeah, I think it's good. Let me see if you can hear me. Let me look. Yeah, that's good. An FTSE is actually good. I love it. It's good as well. Even 10% of that is good. The all one. Yeah. Is very similar. The behavior is very similar to S&P 500. Very similar. It's slightly lower, but it's very similar. It's good. I wouldn't put it more than SP 500 though. Let me see what else are we talking about. Cool, awesome.